This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is May 27th, 2020. This is show number 42. Well, Nick, we had quite a breakout yesterday. And is this the start of a new upward rally?
Well, I think it's just a continuation of what we've been seeing. I don't think it's the start of a new rally. I think it's still the same rally. So right now, the markets seem to be holding up very, very well. A couple observations I think that we should talk about, though, is that we're definitely seeing money rotate out of technology, and that's been really the big winner. The Nasdaq is actually positive for the year, and yesterday we saw some real good. I saw some real good distribution, and we actually talked about that a couple of weeks ago on the program, saying that technology stocks have gotten, very, very extended, and we'll see if money comes out of there and goes into other places. And I am definitely seeing that now. And even today, you have the Nasdaq down about 80 points. That's a loss of around 0.9%. The Nasdaq is actually down 1%. The Nasdaq 100, I should say. And, money's coming out of a lot of these cloud software names, whether it's, Twilio or Spotify, a lot of these big cloud names, the Trade Desk, MongoDB, Zoom. These were all big winners recently, and now they're really seeing some heavy distribution. So it looks like money's coming out of there. But what money is doing now, it's rotating into the financials. I mean, J.P. Morgan today traded up is just under $100. Goldman Sachs is up $8.29. It's over 4% today. Even Wells Fargo is up about 4% today, up $1 and change. So there's some pretty good moves going into a lot of the financials. Now we have to see if the market holds, because when you look at the S&P, we're at that psychological 3,000 level, and we talked about that yesterday, and that's still the number to flirt with right now. We got above there yesterday, but we didn't close above there. So you got to really see more a daily close above there first, and then more importantly, a weekly chart close above there. And then the markets can, continue to climb. But I'm seeing a lot of beaten up retail stocks that are catching bids. We talked about Macy's yesterday. That's up another 65 cents today. That's another 10.5% move for the stock. So it's pretty incredible what we're witnessing here. But a lot of rotation going into some beaten up areas. And that's kind of encouraging to see.
Yeah, so retail is continuing to increase. And so maybe the death of retail has been greatly exaggerated?
I don't think it was greatly exaggerated, but I think as these economies start to open up, you're starting to see business flood back in there. I'll give you a perfect example. 2 weeks ago in Florida here, TJ Maxx or TJX companies, they own the home goods, they own TJ Maxx. They were very, very crowded. My wife was in the store. She said it was like Christmas time. She goes, I can't believe how packed this place was. I said, well, wasn't there... didn't they do some some spacing or some distancing? And she said it reminded me of Black Friday. And that just goes to show you how people will go back and start spending again that quickly. And that's really what it reflects, if you ask me. So we're definitely seeing some stocks out here that are participating. Even stocks like Tapestry, TPR, this is the old Coach. That stock's actually starting to make a little bit of a move on the charts over the past week. Footlocker beaten down. This stock has been rallying over the last 10 days. So you're starting to see, some of these small beaten up retailers really start to make some moves. Now, that's encouraging. Does it last? We'll have to see. A lot of resistance levels are starting to come into play. So that will tell us a lot more. But again, it's going to be really what we see by the end of the week, not so much at the start of this week. Generally, the rule is every time we get a Monday rally, we normally do backing and filling throughout the rest of the trading week. Yesterday being a Tuesday was not quite the Monday rally, but it was the start of the week because Monday was the holiday from Memorial Day holiday, and the markets were closed. So this week I think we'll see some more backing and filling, but encouraging action when you see money go out of one sector and into another. So that's a positive.
Yeah. And so you think Friday, where the market closes Friday, is going to tell us a lot?
Sure. Every weekly close is more important than the daily closes. So, like I've been saying, I'd love to just see these markets go sideways. I don't even need to see them go up. As long as they go sideways, I think that's very, very encouraging going forward. And you build a base and then you move higher. If you go straight up like the Nasdaq has been doing, you're going to see exactly what's happening now. And the Nasdaq stocks specifically are under distribution.
It's so funny because for the crash, all the money came flying out of the market, right? And that's what you get distribution. Prices ended lower. And now you see the money like pouring back into the market. It's really kind of schizophrenic here.
Yeah, well, that's how markets are. They like to fool most of the people most of the time. But again, you just have to watch these tapes, and you have to just let the market tell us everything that's happening. It's not a one-trick pony. There's going to be areas that are going to do well. Even when the market was crashing in March, there were certain areas that were making new all-time highs. And, now that we're seeing, markets up so much, now you're starting to see money coming out of the Nasdaq. As we speak, it's now even falling more, down 1.25%. So, again, pretty good sell-off in technology. But you have other places where the market is doing well. And again, we're going to listen to President Trump later today. He's going to talk about potentially putting sanctions on China over what is going on there in Hong Kong and also in Taiwan. So that spooked the markets a little bit yesterday. We'll see what that does today. But he is expected to say some comments a little bit later.
Well, interesting. Yeah, well, they're promising to crack down on Hong Kong. And what's the world going to do about it? That's the question. Probably not a heck of a lot. But I guess we're going to find out what Trump will do and what other countries are going to do as well.
Yeah, so that could put a little fear into the marketplace. But like everything else, as long as this progresses day by day and you hear more and more stuff about it, the market shakes it off eventually and it climbs the wall of worry. So, that's probably the big headline right now. And again, we'll see what comes out of it. I'm not really expecting the U.S. to do a whole lot there. Maybe they do put sanctions on China. That's going to probably hurt our relationship with them. But I think the COVID-19 deal already did that. So, we'll see where we go from here.
Yeah, I think you are correct. And I think it's definitely interesting times ahead here. So gold, silver are taking a breather today.
Yeah, well, they're actually both down again. So if you look at gold today, it's lower by about $17. But this is good. I try to tell people that. I can't tell you how many emails I get from even my own members, and they're like, gold is going down again. I bought bullion at XYZ price. And I always say to them, listen, if you want your gold to ultimately go higher, you need it to go down first. And, it's so hard for people to grasp that concept sometimes, but that is actually what has to happen. So I like everything gold is doing. I'd actually love to see it even pull down to 16 and a quarter, 1650, somewhere down there. I think that's where you start to see it stabilize. But the longer you can build a base, the higher you can work to new highs off of that base. So that's what you want to ultimately see. I know it sounds crazy sometimes to a lot of people, but this is the action you want out of gold right now. Yeah,
that kind of makes sense. And what about oil? Where's oil at now?
So today we have crude oil trading lower by $1.50, but that should be no surprise to anybody. We got up to $34. That was even $1 higher than what I was expecting. I was only expecting a move to 33. So it overshot a little bit, which is typical, especially when you have a volatile commodity like oil. But this is good news too. You don't want to see oil go up too fast. You don't want to see anything go parabolic. Like I said, we'll watch the pattern on oil for the next couple of weeks, and we'll see where it goes. But right now, I don't really see anything wrong. I actually like the fact that oil is stalling out here, and that's what it's supposed to do. It's into a lot of resistance around the 33 level on the continuous oil chart, and let it pull back. Let's see what kind of pattern develops over the next week or two.
Right. Makes complete sense. You're sticking to BP and USO.
Yeah, I have BP call options. They go all the way out till October. I love the chart pattern. In fact, the oil market's down today. BP's up almost
Correct.
1.55%. So that's a real encouraging sign as well.
And BP had been heading lower as oil prices were going higher. So it's just an interesting pattern that it's going opposite crude.
Yeah, but if you look at the pattern on a bigger scale, and you'll just see that lows were made in March for BP on the 18th, and then we've really just gone sideways in a range from 26 to 22 for the last 2 months. That's what you want to see. You want to see those long sideways bases, and if you get those sideways bases, when it makes a move, it'll make a really, really robust move to the upside. So again, I own call options in BP. I also own call options in USO. I'm not sure how those are going to work out, just simply because USO has changed its entire structure. So we'll be watching that. But again, those are all the way out till October. And all option positions are small positions. We never take massive positions in any options because they do come with much higher risk.
Definitely. Hey, just taking a look at one sector we've been following, airlines and hotels, travel sector. So yesterday was a real blowout for the airline stocks.
Yeah, today the airlines had a really big gap up, and they've all faded right now. In fact, Southwest has just gone negative. But that was a big level they went up into around today's highs, just for the fact that you're going up into the April pivot. That was the last pivot before the new lows were made. So that's a big resistance zone. So airlines are going to need to consolidate this level, and then they can push higher. But right now, all the airline stocks have to get above the April 9th, April 10th pivot. If they do that, you get a short squeeze in that, and they go a lot higher. But right now, they're into that resistance zone. Just think about it like this. All the people that were in airline stocks around that level, just say in March and even in early April, they get a chance now to get out, break even, or out of the pain that they've been in since the airlines made new lows. That's why you're seeing the selling pressure in airlines today. Not that there's heavy selling pressure. Some of them are positive, but like Southwest, that gapped up over $1. Now it's negative by 40 cents. And, again, it's very, very difficult for that stock to get above that 35 level at this stage because you've had a really good move into it. Basically a 10-day rally right up into that resistance point.
All right. And finally, how is Mickey D's doing?
Yeah, McDonald's up about $1.78 today. That's about a 1% gain. So far holding up. This name can be volatile. What traders want to watch for in McDonald's is a clearance. You want to clear 190. When you clear 190 and you do that on especially a weekly close, this thing takes off like a rocket ship. So again, that's a big break point in the chart right now for McDonald's. Going to be 190. When it clears that, get ready. This thing is going to really, really move to the upside.
Wow. So it still hasn't, because it's had a pretty amazing move since its low in March. I think it was 160 something, and now it's up at near 187, huh?
Well, just on the 14th of May, we traded as low as 168. Now, it went up to 190 yesterday and it backed off. It couldn't get above its 100-day moving average, which is also a very big resistance level going back to April 29th when that level was tested again. So it couldn't get above there. But all McDonald's has to do is clear that level, and you'll see this stock in the low 200s pretty quickly.
Yeah, so once it clears 190, it's heading to the low 200s, huh? And
that's kind of how it works. You got to get through one level, and then you go to the next level.
All right. Well, interesting markets never cease to amaze. Well, that's it for today. Make sure you go over to Nick's site, inthemoneystocks.com. Check out Nick's record and a lot of other useful information on the site. The Twitter feeds are at ITMS, at Nick Santiago 01, and of course ours is at Kerry Lutz. And if you got any questions or comments, you want us to take a look at a particular stock, we're happy to do it. Just send an email to kl@kerrylutz.com. That's kl@kerrylutz.com. And Nick, we'll pick up where we left off tomorrow.
Sounds good, Kerry. Thank you.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at NickSantiago01.